Tuesday. You see, at the start here, we identified the magenta algorithm here. Now, this was quite crucial because once you identify the magenta early, especially this early, and we don't see magenta having any influence here right at the start, this is when you need to stop shorting. This is exactly where you stop shorting. You don't short this. You wait for structure to start forming. And if you can understand that, you notice the magenta, and my instructions then was to wait for that retracement. This would be clear that you see magenta trying to take control. You see magenta trying to build liquidity for the selling. So if this doesn't happen, which it didn't, right at the start here, now you don't short this, so it saves you a lot of time and a lot of pain. Especially early candles, a lot of gamblers here, so let them gamble. And by then, when we revisit it again, the value of all the contracts here, which the IV was absolutely astounding, would have already halved. So it makes sense for them to start burning them first, especially early in the morning, unexpectedly, with that drop in the morning before they start pushing it down. This is why you see that there is so much chopping here at the top. Is just to burn all the contract value here. So at this point here, we also identify the teal. Now, we identified this teal quite early on. There are several ways you can deal with it, but this engulfing candle was beautiful. I wasn't ready to catch this trade, but if you were, you saw the engulfing once again. Take a look. Several factors to this. The first one was a failed selling continuation, right? We broke the orange and we didn't carry down from that precision algorithm that we have already identified. You see the magenta, you saw the teal already building liquidity right there, and it grabbed beautifully, and we had a strong precision algorithm up. So this could be a beautiful trade if we were ready for that. And a big part of that was to avoid shorting this, knowing that there is further confirmation you need to wait for to short this, and knowing that you saw the engulfing, which formed a beautiful head for that head and shoulder pattern here, and all because we identified the teal algorithm early. Now take a look at that particular 1 minute candle, especially after the big green candle here. You see the bounce right there. Now this would have been my entry. You would have very beautiful stops here of that teal if you wanted to take that trade. Now you have the certainty of this engulfing candle, because if this already went down and the price disagreed with that and we started engulfing it, you know that there is plentiful of supply here. And this means that this may form into a strong support, especially with the teal in tow right there. So yes, you could have set your stops here. If you want to, you could have set your stops at the orange. So you notice this is absolutely beautiful because you have very tight stops and you have a strong precision algorithm up, even stronger than what we have originally found. And you have definitely taken your profits here where the original green resistance was right there. Now just take a look at this trade. Absolutely beautiful. How much RR is there? We're talking about 638 here. Now this is about a 1.5 point trade, and your stops are probably less than half a point. So this is a good 300% trade right there, as long as you know what you're doing and looking out for structure. Thereafter you see the chop starts happening, and big part of that was from that teal algorithm. You see teal is starting to build liquidity here. Now right here, there's absolutely no structure. You take a look at that. Yeah, maybe we're tapering with the orange. Yes, yeah, we're tapering with the orange. The orange is trying to push it up here, but we are being wedged. Now, one big reason why I shorted at the break of the orange here was understanding that the volume was decreasing. Now, you understand that when the volume is decreasing, especially when we are wedging here. How would you know you're wedging here? Now, it's quite straightforward when you see it in the magenta algorithm, but it's clearer here with the orange. You see the orange that's building liquidity, isn't it? And we don't seem to be able to break out of that. And this is also known as your liquidity wedge. Now, when we are wedging here with the liquidity wedge, I believe that magenta may have a clearer structure here. I'm not too sure. I don't see magenta. I saw orange. It was quite clear. So this is still a liquidity wedge, but this is an even stronger liquidity wedge between the stronger orange and a strong teal. So when this wedge happens, volume decreases. You know it's coming down. Why? Because when the bulls are buying up in the stronger algorithm, right, and the bears are blocking it with a weaker one, you know that the bears are winning, because even a weaker algorithm can surpass a stronger one. But only because if your volume is decreasing, it means that the volume for this orange is decreasing. The volume is decreasing. If the volume of the buyers are decreasing, it means the sellers will eventually prevail. Now, at a long extended period of time, lowered volume. Now, this is much clearer in the 5-minute chart, so always open up the 5-minute as well. You will see much larger structure there if you want to, but your entries will be a little bit jeopardized, so you have to have both charts open. And this was when I opened a trade, I think, on the break of orange, one of which I think. So you have to pay close attention where your stops are. Now, technically speaking, if I were to open my trade right here, I would have to protect it by the teal, because you see the teal very beautifully building the liquidity here. You see the teal liquidity there? Now, I talked about this teal liquidity, isn't it? Quite early in the day. Let's take a look. I think it was here. I said you have to be careful because we saw the teal liquidity. So you always have to be prepared, because this teal liquidity turned out to be quite important, isn't it? If you see it at the end of day here, right? We grabbed it like a boss. So this is very important here. But at the meantime, you understand magenta was in control. You saw the wedge that's happening, the liquidity wedge between the orange and the teal. You saw the breakdown here, lowered volume. You could have waited for magenta. That's fine. I just want you to see how beautifully that magenta rejected that range here. Take a look, engulfing candles again. Head and shoulder pattern. Beautiful. And by then, we would have already seen stronger selling algorithm here, this time with the green, catching another trade to the magenta, and one more here. Just take a look beautifully. Now, I wanted to zoom in there, and you see how beautifully it formed. As long as you have penny perfect algorithms, you can base your trade very clearly like that. Just take a look. It's absolutely beautiful, especially when we are waiting out for that retracement of magenta, and you see it happening right there. So now this was a beautiful trade all the way down, but you cannot be complacent. You cannot just assume that it will head down. You need to be charting your algorithms. And remember, as I told you, if it's not in the strongest, you don't want it. So I cut my runners here and just extracted all the profits. You can always reload this if it heads down, isn't it? You see magenta can be building liquidity. An example, if it wants to head down, you will get more magenta building liquidity here. However, you do notice two things here, which I mentioned. The first was seeing that the teal was building liquidity. Do you see teal building liquidity here? Yes. And if we have failed selling continuation, that will happen. The second teal right there, I talked about this second teal here as well, building liquidity on the bounce up right there. So firstly, you see teal building liquidity, but there's an advanced technique here, and it also has to do with the magenta. Now, if the bears wants this to head down, you will see this, where the magenta turned into a resistance. But I want you to see what happened to magenta here. This was resistance. Take a look at all the wicks here, but right now it has turned support. So when it has turned support and teal has become that inverse head and shoulder, right shoulder here together with the magenta building support, you know that a reversal may be coming. So you take it level by level. You cannot assume that it's going to head up like what we did today like that. You always have to take it level by level, algorithm by algorithm. And what's wrong with that? Because if you're trading 0 day to expiry, level by level, algorithm by algorithm, you are going to extract more profits and you are going to suffer less loss because you manage your risk properly. So in this case here, you see, once we had that engulfing again and breaking out of that teal, just take a look here. This will be where I would have taken my entry. Engulfing, breaking out, teal, right there. One more time here as well, especially once we reclaimed back two very important levels. Firstly, the magenta here, and I talked about this yellow 636 here. This was important together with the engulfing. So this is a trade I would have definitely taken if I have not taken it early. Right, I took it here on the break of the teal because why not? You understand that you could have set predetermined conditions, especially on my broker. Let's take a look at my timing. I'm curious too because these are automated trades that I took. Let's take a look. Yeah. 1237. 1237 is about here. Oh yeah. I automated it about here once we broke out of this range at a certain price. I think I set it at 140. And that's my limit price here. So you see, it's beautiful, isn't it? You still could catch the trade here because you understood the magenta was in control. And by the time I closed my trade at 143, which is about here near the top, that's about $7, right? I set it at about 500%. I closed the trade there. Absolutely beautiful trade because you understood the teal algorithm. You understood the key levels where the algorithms are. You have confirmation on the support that was a resistance and it turned into support here. Now, if you miss that, that's absolutely fine, right? Especially if we started building that precision algorithm and you could not chase this. You can't chase this. Please don't chase this. You can always wait for another move. If it doesn't come in the same day, so be it, because there's always liquidity there. Now remember this main liquidity I talked about, right? And you see how the market built that inverse head and shoulder so beautifully there. Look at the retracement there. Oh, that's just absolutely beautiful, the retracement, right? You could have taken the trade right at the breakout here, or at the retracement here, or at the break of that yellow there. So understanding this is just absolutely beautiful because you already identify that early teal algorithm right at the start there. Now, there are several things here about strike prices you have to pay close attention. Now, the strikes here were just astronomical. I mean, the contract prices on the strikes here. I was talking about how a 1 delta trade, which is a 10% chance of it happening, about 10 points away, cost about $10. That's $1 in the money. So you can imagine the expected move was $1. And this is why you see that the bears rerouted this before it started dumping off that magenta to expire all these out. Because by then, once we get back here, it was half the value and a more realistic price here. So at the start here, you see I'm taking, today you notice I'm taking very, very small price contracts. $1.40 here. If I'm not wrong, $2.75. I'm not sure. Let me just take a quick look here. $1.75, right? I took a $1.75 here. Right, when you understand this, you must first know where your strike price is. In this case, $1.75 here. My strike, I think, was about here. Right, I'm in the money only about here. Now, understand this. 20-day moving average is a very strong resistance or support. It's a very key level. So if I take 175 here, what is my stops? The worst that can happen is I allow this entire thing to expire, which is about a $2 value. But I will probably stop it about 50 cents, which is about $1.25. It's very acceptable. But if this works out, I break out of the magenta algorithm here. I'm expecting a big move. It will be a big risk, a small risk to a big reward. So you understand why I'm taking small contracts here. Because at this point here, if I were to take something in the money will be probably here. And it will probably cost me $10. So I'm spending $10, right? Which is hoping for a 3-point move. Can you see the risk involved? I'm spending $10 per contract, hoping a 3-point move will start to form. And if it doesn't form in that 3-point move, I lose $10. Comparably to $1.75, I will lose $1.75 if that 3-point move doesn't form. So sometimes there is just no need to be taking in the money because you know that a big move may be coming. If it doesn't come, you do not lose too much of a value. This is what happens when there's high IV. You can't expect to pay $10 hoping for a 3-point move that hasn't materialized yet, because this $10 will disappear almost immediately once we retest the 20-day moving average. This will decay to $2, $3. You will lose more than 80% of the value. And that's the problem with high IV. You have to be more appreciative of how much you're out of the money and how much you're actually paying to be in the money. $1.75. It's what, 18 cents on SPY? It's almost negligible. It's a stop loss. It's a stop loss amount. So yes, this is also known as a lotto play. You're basically just risking the entire value in order for the move to come. And that can happen in your high IV environment. Another thing about high IV environment is to learn to sell. Now, we had a big red day, means things are at a discount. I talked about that. And you can always sell puts. You can get very good value when you sell puts because you're getting elevated prices, elevated premiums. You're being paid more to undertake risk to buy something. And it's absolutely beautiful. I love high IV environment. I always sell options when I'm seeing big red days. It's always at a discount. And thereafter, I can reduce my cost basis by selling calls against it thereafter. Beautiful to do that. Now, likewise, again, I'm taking $1.40 here, isn't it? What's my risk? $1.40, and the strike in the money was at this liquidity zone. And this is why I took that. I think it was, let's see, 6,400 here. So this is about SPY, SPX 6400, right? Where the liquidity zone is. I took $1.40 here. What's my risk? It's a 14-cent SPY risk. That's just an acceptable stop loss. So this is a lotto play, and this is why you see I can just place my trades and just go away. Because high IV environment allows you to do that because the contract values are just out of whack. And anything that's out of the money may give you very good rewards. So remember, as I mentioned today, you allow the runners to do the work. I talked about this, right? You allow the runners to do the work, and you allow the runners to give you the profits from the big moves. I talked about it. I don't know where is it. Yeah, you can search it yourself. It's about understanding, right? In high IV environment, you allow the runners to do the work. And this is why I can go away, put in a trade, and just set my parameters. Even if it doesn't work out, it's only $1.40. Big risk to rewards. So understanding how to set your strikes, especially high IV environment, when you notice there could be big moves, you will be absolutely all right. But you have to be very careful, because if you see very tight chops throughout the day, very tight ranges. Now today, just the chop alone, right? The morning chop alone was a 4-point range. So 3 to 4 point range. So you could absolutely expect big moves because there are big imbalances. But usually, let's take a look at the usual days, right? Where it's a 1-point chop like that, you have to be very careful taking out of the money. It doesn't always mean cheap is better. You need to know the expected moves. You need to know where the market may be gravitating to. You need to understand the imbalance. And obviously understanding the strikes, how much reasonably it is. And I taught you in last week's video, using the precision algorithms and using the general algorithms in play to understand how realistic it is to get to the strike price near end of day, near midday, so you can be able to calculate whether it makes sense. So taking a $10 out of the money trade that is only in the money when we get here. So I'm paying $10 for it to move 4 points before it's even break even. That's just ridiculous, isn't it? But it makes so much more sense if I'm taking $1.75, which is a big 1/6 of the price, right? In order to get there, to get here where I need to. That's such better value, isn't it? Because I'm waiting for it to break the magenta. Right, so say if it doesn't break the magenta, I may even lose money, but that's fine because I'm waiting for the big moves. It's a good metric. It's a good risk to reward. If I'm not wrong, it got to Let's take a look. 1048. 1048. Yeah, I doubled the price by the time we reach here. So I've already protected by the time it got to the teal algorithm here. So yeah, that's fine. Even before it started retesting the first magenta, I've already covered my position, so I can allow it to just run down. So you notice it's just math. It's just understanding your algorithms, understanding how realistic the strike is. Most retail traders, they don't care. And this is why you get to see that they trap liquidity. Right when we got here, most retail traders were probably just buying puts, hoping for a way down. And yes, it went down. But if you bought your puts here, by the time it got here, your value would have halved. And when we went down here, you would have not even recovered your money. It's because they don't understand the realisticness of the strikes. They don't understand a good value in the 0 day to expiry option, the intrinsic, the extrinsic value. And most importantly, they don't understand how to be calculating and understanding liquidity that needs to be built with the algorithms right there. So important lesson today in high IV environment, understanding to let your runners run. You notice the runners will run right here. You see, it's just beautiful. It just kept running, right? We got 2 very good trades. I've got 2 good trades here today. One that's 370% and one that's 500% right there, because I allowed my runners to run after covering my position early. But you can obviously just take all profits. That's fine, because yes, obviously the market was kind today with a good imbalance. Wednesday. Now Wednesday was quite an interesting day. Now you have to understand some of the key concepts here at Wednesday. Now, firstly, it's the same thing from what we see right here, the magenta here. Now, this is very difficult to catch a trade here. But if you really wanted to, now let's break it down here. If you really wanted to catch a trade, understanding engulfing candles is very important. Now, take a look again. Dual algorithm play, isn't it? With the zombie from the pink, engulfing candle, rejection from that magenta. Absolutely beautiful. It's still a possible trade. You can still be taking this, especially when you see a precision algorithm in the teal. So yes, sometimes you can understand where your supports and resistances are quite clearly, and you can take quite confident trades like that. But otherwise, I wouldn't short this here. It's a little dangerous because we lacked some very clear structure in terms of the liquidity. You could catch maybe the magenta here. Maybe. I wouldn't catch this. I'll be waiting for the inverse head and shoulder pattern. And you see that happening here with the pink algorithm, isn't it? Right? We saw pink building liquidity. So this was quite a no-brainer here. Now, if it took the breakout here, fine, you'd be all protected getting out here, and you would have the confidence to re-enter here once the engulfing forms the nested right shoulder of that head here, isn't it? So understanding engulfing candles once again in the 1 minute chart, it will make more sense only if you have penny perfect algorithms and understanding the structure that started to form here. So a big part of this is also understanding the cup close, right? And you see the handle forming. That's what I was talking about, waiting for the handle. And on the breakout here with the teal, you see that the teal wants a resistance with the red candles here, soaking up the sellers, turn into that beautiful support here, especially with that many wicks, right? And you have a clear precision algorithm there. By then you would have already that orange. So that's a clear support level you can use as your risk to rewards right there. Now, once we reach the top, now 5-day moving average was here. Now it's trending up now, but back then when it was live, it was about there, I believe so. And you notice that we started trending down again. There's a possible zombie trade, especially when magenta started breaking down here. Now, this was when we identified the blue algorithm. And once again, dual algorithm, right? I want you to see how to be looking out for that dual algorithm setup here. You could have waited for the blue retest, that's fine. You would never miss out. Now, understand the dual algorithm and you will be able to see so many beautiful trades here, especially off here. That's beautiful. Absolutely beautiful. Inverse head and shoulder pattern. I'm sorry, head and shoulder pattern here. And with that teal algorithm, you have caught the trade here, right? Magenta helped together with the convergence of the blue and magenta. So absolutely beautiful trade. Once again, dual algorithms helping you see it much clearly. And thereafter, once again, blue forming the liquidity again. And this time even clearer because we had that retrace here on the breakout. So absolutely beautiful here. Now the problem with this, and I've already left the trading floor at that point in time. Now the problem with this is that it didn't sell. So at this point here, neither was the selling in a stronger selling algorithm. And you notice what selling has been teal. So if you don't see teal selling, you don't want it because what you see is the tapering of that pink. So a possible trade here would be to take the break of the pink. You see that, isn't it? Or you wait for cups to close with the larger yellow algorithm that I was talking about. And well, it just went straight up. So this could still be possible if you charted a precision algorithm and started chasing as it breaks out. So let me give you a very clear example here. Now, as it breaks out all the key algorithms here. Now, this is also one technique of chasing a trade. Now, say I, charted a very clear precision algorithm here. Now, pardon me, I'm just sketching this. And you notice it starts to get even stronger here, right? So at this point at the break here, let's say I charted the green, you don't see all these candles. I can take a call here and my stops will still be very tight because I'm using this green. If it retraces, I can still get the trade in, especially near to end of day. You're probably scaled down and the risk to rewards is probably extremely great because this is the strongest precision algorithm. So I would have, if I was in the mood, if I needed to make more money, I would have taken at the break using the precision algorithm as my support for my stop loss. And likewise for that break of yellow, you notice here even stronger. So this gives it even more legs for you to be chasing a trade because it just went up in that sort of precision algorithm. And all these from that understanding of that pink algorithm that's tapering at the ground here and the support, and you see the break, the initial break here, and that will give you the precision algorithm here. But how many of us at 3 p.m. would still have that stamina and focus to be charting so diligently? Only if you avoided the chop here, you had some rest, or, well, for me, I've made enough money here. And I was working on other stuff, so I just set alerts and I missed that, and that's fine. But this should come as no surprise for you. If it happens again, you understand how to be using the precision algorithms to plan and, most importantly, chase particular trades and manage your risks. Sometimes it happens, especially when you see volume just keeps increasing. After 3:30, it happens. Yeah, sometimes it happens. You see this more often on squeeze days. Well, technically, they're not squeezes on SPY. SPY doesn't technically squeeze. It's just rebalancing. And you see that sometimes on Fridays, end of month, end of quarters, especially to highs. So this is a technique you can watch and learn. See it happen here. Perhaps you'll learn it again. You see it again, you'll practice, you'll get there. A pretty good risk to rewards, isn't it? It's a 3-point move, about 3 points. Within 30 minutes, 3 points for SPX is about 6 strikes. So you literally can have a 10x move right here if you played it right together with the precision algorithm. But so be it if you missed this, right? Because it will come again. You just have to learn to have the skill to catch it again. Forward, because we were already waiting. Right, I talked about the microstructure here for the handle that you had to wait for. We talked about that. We extrapolated that. And so all you had to do was to wait for some sort of structure, isn't it? Now, it's important you use the algorithms to confirm some structure instead of just projecting a bias, because that's obviously some sort of bias. So you have to be very careful. You can have some certainty, but do not form a bias, because that will affect your trading decision. So right at the start of the day, right, we identified the magenta. Now this was important. Now this was one of the more important trades in the morning. I talked about how we saw magenta in control, right? And a big part of that was understanding. If you were to chart a little bit more diligently, you notice the dual algorithms again, isn't it? Do you see that here? Right, so when you are able to see the dual algorithms at play, you see that the selling has intensified because the buying has become more controlled by the sellers. And it helped that we had this pink algorithm to act as a resistance for us to take trade entries. And for me, I took a zombie trade. Right, so that was quite straightforward. I saw the magenta already trying to build liquidity, and I warned you about that. So don't forget, once again, to be reviewing the analysis on the day. Right, I talked about that magenta, about how it's in control. So just please review that throughout the entire day. And when you understand that, you can understand why I took a trade here. Now remember, if I took a put knowing that the pink algorithm's in control, and I talked about this, I think, in the first episode of the secret training video. This is trending down, isn't it? So my stops will never be, in a way, threatened until it breaks out. And when it breaks out, it causes me to know my confirmation doesn't work. And so this would be a beautiful time, especially when I already saw dual algorithms here. Magenta, I warned you about that, and you see pink forming. So it's quite a easy trade to take because you can manage your risks well, not because you know this is heading down. With 5-day, so close, it's a little bit risky. So you just have to be a little bit more mindful about that. So it's quite straightforward here if you learn to see the dual algorithms and take a trade here. Now, otherwise, you noticed that we closed the cup, isn't it? And you see the engulfing candle again of that 5-day. So this was another beautiful trade. Now, I could have taken, I think I could have taken, this was $7. I don't remember how much I took it. Let's take a look. 420. Okay, I reloaded this at 420. I could have gotten it 7, but I didn't protect it at the pink, even though we have the pink penny perfect. Now, this is a lesson I want to talk about, protecting your runners. So I want you to take my trade here, this one. Let me try to bring it up here. This particular trade is very important, right? So you noticed I took a put here already from the start and protected it here. Right, let's take a look how much I protected it for, about $5.30. So you understand, I opened it at 4, protected it at 5.20, right, instead of reloading it at 4 again. You see, so instead of holding it and hoping it goes down further, right, once it reached the end or nearing the end of your precision algorithm, you take your profits, take more of it. Obviously, I took a few more in tranches on the way up here. But I always buy it cheaper because I saw clear resistance here in that teal and obviously the 5-day moving average, which was a strong support. So turn resistance with the teal, and I can have very, very tight stops here. Almost probably to the penny, maybe a 10-cent stop. Right, so absolutely beautiful trade. So even though it was such a small move here, right? If I didn't get greedy, it was a 4 to 7 right? Still beautiful 75% trade. And 75% is assuming I take the entire contract value. But this is to the penny. So technically speaking, this is probably a 700% trade because it's 1:10 here. Or if I were to cut it straight after it broke out. So you understand the risk to rewards here, understanding how to be nurturing your runners instead of just holding them and hoping. Sometimes it's just better to take more profits. And right there, you see we started forming, right? We already saw this pink liquidity, 5-day moving average. This inverse head and shoulder is just a no-brainer. Beautiful trade. If you need to have some sort of entry, my entry was here. I saw the large red candle and I went in here. Same thing again, right? I saw the 5-day. This was my, in a way, my stop loss and protected it before the green algorithm started breaking down. And you notice it took some time up as well because it needed to close the cup. And you see it close the cup here. Right, I talked about waiting for cup close, and you see it close the cup. There is a beautiful retracement here as well, right? Just see the retracement of that pink algorithm. Absolutely beautiful. So now, a very key component of taking trades here is to understand when to be taking them. You have to take them calls at support. If you get stopped out, absolutely fine. You'll be in good stead because it's a very tight stop. You're just waiting for the next confirmation there. We can have another confirmation here too, isn't it? When you saw the pink building liquidity here with the teal. If you wanted to take the breakout here, there is a very strong algorithm of the orange. So you could have taken a breakout here with your stops at orange as well. Right, still end up. Still a beautiful trade right there. So understanding how to be managing your stops, understanding using the algorithms to build structure and looking at your risk rewards, it will be quite straightforward to plan your trades and to plan your entries right here. It's the same thing. That's what I've been talking about and teaching for the entire week. The dual algorithms, isn't it? Especially early candles. Now, it's absolutely all right if you missed the entry as I did. Well, you would have noticed my entry was right here. Right at where the magenta was. And that's only because I identified the magenta quite early on, right here. So the identification of the early algorithms can be quite important as well. But if you're a newer trader, you're progressing into this. As always, I would like you to wait for clearer structure. It's just a demonstration to you that you can make money in the early algorithms. You can make money in the final 10 minutes. You can make money anytime. But it varies according to your skill level, definitely. So understanding this is quite important. Now I want to zoom into that because, firstly, understanding that the dual algorithms was very important because that's what we identified, right? We saw the orange. The orange was quite early. I think over here we already saw it happening, right? The green, obviously. And you see that we started having some sort of resistance right at the green. And it was when we identified the magenta. Now, I think some members have, yep. So, Cha-Cha, for example, records the early charting. And very well done here as well, including my analysis side by side for the early candles. So, right, many members are contributing every single day. So I'm very thankful. And you can use that as a cross-reference to understand what to be waiting out for, right? And understanding that, you would notice and you will understand why I took my puts at the top here with the green candle. Now, partially as well, is because you notice that there is some changes in the volume thereafter. Well, the volume has dropped, the large green candle, and it suddenly dropped down, right? Otherwise, what you would notice will be a larger push. Now, obviously, at the back of my head, I was prepared for this to push out in that green as previously it did, right? So you have to be mindful of that as well. But it was also then that I charted this green with them selling precision, and that helped me guide this way down here. I got lucky with this big one, protected my trade, obviously. And from then on, it's stress-free, isn't it? I don't even have to think about whether this trade will work anymore. I'm just managing my risks, and my risk will be managed by this green algorithm here. So this is what I mean by preparing yourself to get lucky. And it was really lucky Friday because we went all the way down in that green precision. And you see me nurture my runners, right? I opened lower delta strike and ran it up to another 100%, although it went up to 600 near to that 5-day moving average. But it's fine. You take whatever you're comfortable with. And the fact that we can do this every single day truly doesn't matter. I'm never missing out here. Although, if I were more focused, I would certainly have held some runners all the way down in the green algorithm at least, because this was quite clear structure here. So that aside, what other entries do you have apart from this top one? Now, why was this top entry good? As I always mentioned, right, you have very clear stops here with the magenta. Right, if it broke out of the magenta, I would have cut it straight away and wait for it for another re-entry if it starts going down. That's fine. You see, it's all about managing your risks. If you understand how to manage your risks, you can get out of there at a really cheap cost instead of worrying that I'm right or wrong. So some of you, when you trade, you're worried about being wrong. Yeah, you will be wrong sometimes, that's for sure. But that shouldn't worry you. If you're wrong, just get out of there at a very cheap cost. And a big part of this is, firstly, not oversizing. When you're not trading with too much money you can't lose, you can cut the trade with ease. You can cut the trade without any emotional attachment that you have lost a significant part of your net worth. You understand what I mean by that. And so this was quite a clear trade for me, right, to take puts from there because you understand the magenta already in play. Now you have to understand this is something like batting in baseball. You don't always hit the ball. You don't always do. But sometimes you hit the home run. But you just have to keep batting, right? There is, in fact, the batting average is, for professional players, probably 0.3, I don't know. Probably that. I'm not too big a baseball fan in terms of statistics, but it's about that, if I'm not wrong. So that means they miss more than 2/3 of the time. And that's fine. For trading, you probably hear that too. So sometimes you just have to take your chances. But when you take your chances, you don't expose yourself to too much risks that will wipe you out. Right? So it's about staying in the game. It's about getting involved and managing your risks. As you get better, right? You get better, you will get more involved like me. Right? The early candles, the midday candles, final 10 minutes. I usually don't trade too much nowadays. Once in a while, maybe. But you get the point. Now, another entry from here will be this retracement here, isn't it? Right, I talked about this, and you see the retracement perfectly as such. Now, this helps because we do have this green algorithm here. Now, if there is a few scenarios at this point here you have to pay close attention to, right? Because this could possibly do this. And we retrace it back out like that. And that's fine, because if that happens, right, you know when to stop out, you know when to re-enter, again. And this is what I mean, because if you stop out here, this will be relatively cheap before you re-enter again. Or any re-enter, you probably make it back and even more. So understanding how to size your trade is quite important. So this particular trade here will probably be smaller in size than this trade here, or this trade here, for example. So you must understand how to be sizing your trades, and this comes with practice. You know what works for you, what doesn't, right? Sometimes following the precision algorithm doesn't always work. There's no surety in trading. Sometimes they do just spill over, because you have to understand, these are tens of millions of people placing orders in the world. It's dynamic, it changes in split seconds. So you understand that this could form that head and shoulder pattern, isn't it, if it wants to head down. And if that happens, you have a clear structure after you get stopped to re-enter again, isn't it? And you know that this part, in that case, this particular teal algorithm is another beautiful resistance here that you could enter and have your stop loss there. You probably enter small, and when it reaches here, you add on to more positions. Once you see the precision algorithm, you can add on to your position here. Now, always add on positions only when you see the precision algorithm forming, because by then you would have more clarity of the direction, especially on the breakout there. Right? Otherwise, if you wanted to chase, you certainly can, because take a look. You've chased here, maybe some contracts, one or two, that's fine, right? You could have protected within one candle. Remember, if you're chasing, you have to protect aggressively. And what that means is to protect your trade literally, if you can, within the next candle. And you probably can weather out the entire precision algorithm there. Now, don't be so afraid of losing. You have to be more afraid of oversizing instead of losing, right? And with that, you see, we went all the way down. Now, at this point here, it's difficult to chase. It just really is. So you have to learn how to downsize your trade and try to catch the moves within the green precision algorithm in that case, right? Okay, thereafter, you see, we do have another structure here, which I talked about with the magenta. And prior to that, you do see magenta again forming that retracement here again. You see that, isn't it? So it's quite straightforward. You do see retracements happening. But this particular structure here, which I talked about, you see the green, but at the meantime, you do see teal already starting to form some sort of support here. So you have to be very careful, right? You see that already forming. So you have to be very careful. And on this breakout, I would have taken where the 5-day moving average is, because this formed a beautiful inverse head and shoulder pattern. Can you see that? Of the magenta, which, remember this week's lesson, from a resistance, it has turned into support, and with the 5-day moving average, formed the two shoulders here, the left and the right, with the head of that teal support. It's a beautiful structure on the way to retest the main liquidity area here, which is this teal algorithm. So you could have caught this zombie trade. This would have surely be a zombie trade, because you're taking the early bounce without clear structure here. Although there was a clear starter structure. Now, on the retest of this teal, you do see that the teal is building liquidity here. And we have some buying of that green. So this is probably as good as it gets, right? You get good trade here, and you see the teal already rebuilding more liquidity, and you don't see the green happening again. Now, at this point here, it's futile. Just call it a day. Right, and you can see how we were just trapped within. Now, I'm sure there's a certain structure here with the teal, for sure. For sure there is, right? You grab the liquidity here, forming that right shoulder here. But at what cost? Probably over trading much. So you just set alerts, just go away, right? Probably you catch a 50% trade here, and that's fine. Right? If you really want to find profits, you can, but you have to learn to size your trades, and in this case, I will certainly size it down. Especially if you have very strong profits from the day, don't be gambling away your profits. And you don't see magenta being threatened at all, right? This was probably the most. So you see the liquidity here. If it goes down, you know that this will grab it. So you're prepared here. You set your alerts here, right? And obviously you set your alerts here because you already see the teal building more liquidity at that point, right? Probably at the point there was another stronger algorithm. You could see it already forming, right? I mean, you can already see it happening. So yes, but running out of runway, probably one or two good trades here, 50% trade, that's fine. Size down 50% is still very good profits. So lots of lesson this week, and you see it in application here. Now, from next week onwards, I may release this more frequently instead of weekly. So give me time. I thank you for your patience in allowing me to do this, and I truly hope that it has helped you and accelerated your progress. And let me know if it did. Let me know in the feedback channel here. Just let me know if it did help you so that I know what to do more. I truly want to root for your success. So please do your best, as I am too, trying to do my best. My objective is to ensure that by year end, you would have a very solid foundation. We start the new year very strong. We continue to make profits every single day, develop this skill, become better traders, better people, which is the core foundation of being a good trader to start with. So thank you very much.